We are live, everybody.
It worked.
It worked. Hope everybody had a nice weekend that's watching this, and pretty quiet weekend. Ryan, did you anything exciting on your end?
No, world's still together, so that's good.
True,
Uh, you know,
it is. Well, nothing really happened over the weekend, and I'm Ian Walsh from Hard Money Bankers, and this is Ryan Walsh from Hard Money Bankers. Probably should say that. You could probably guess by their logos. We are just following the markets right now. There's a big tumultuous move here that started about a month ago. So we started following it on charts and stock charts, and it seems to have recovered, and which aligns perfectly for earnings seasons and stuff. But we still have. So this is the Dow daily chart that we've been following, and you can see the uptrend here, the line that was broken. Not that. This line here was the uptrend line that was broken, which is pretty significant from the COVID days. And then it was going to look like it was going to go to this trend line down here on the daily, which would have been really something else. So we've just been kind of tracking volumes, but we've come back to the all-time highs in the marketplace, and makes this like a very clear dip. I would say that it was interesting how over the weekend they said with the Evergrande situation, for those following Evergrande, it's the 122nd largest company in the world, number one home builder in China, has debt payments due, that they made their debt payment somehow out of nowhere. They pulled out that first debt payment, and what was it, Ryan? They pushed off the issue for like 3 months.
Yeah, so they made their first $83 million payment, which is supposedly a $300 billion. So kind of a drop in the bucket payment, but they were able to extend somehow, I'm not exactly sure how, another 3 months for another big payment that was due. So I don't know. I guess they're paying coupons with their coupons now. I don't know how they're doing it, but they are.
I think it's interesting though that the market starts to rally and then they drop the news. Like, I think we at one of our shows we even said, are they just going to like pull money out of under their bed? Like I kept saying, like, do they have? Well, they have money. Apparently, they do have money under their bed, and they gave it to China, and they said, or whoever they owed the money to, as the market rallies. So all a premeditated move down and up. The charts were saying it right now. We're at all-time highs with low volume, which isn't great. Mark does not look like we're going to get this one here on the crash. This is the anniversary of 1929, so that's not going to happen.
For a minute there, though, it was looking like it was going to.
A tiny bit. It made a move off the open, but
well, I mean, if you take the up days that are on your chart and you make them red, it's a totally different story, right? So we were that close to being there.
This morning?
No. I just mean if you take like the stretch of up to the 7-8 up days that we had, right?
Oh yeah. The other side, this would have been a totally different story if those were all
right.
red.
That's what I'm saying.
Turn the chart upside down. Yeah.
So it's not like it was far away and like.
Well, no, I mean we documented the war. The war was right here, right? It was
right.
this candle and this candle, and we said if you get over this one, you win. If you get over this one, you win. As a bull. So the Bulls won that match. But I like. Now we're gonna go to all-time. Now we're at all-time highs. It'll go up a little bit. Then it'll pull back. I mean, we're due. The market's sideways right now at the top at the all-time highs. So we're due for this to like pull back a little. 7 up days in a row or 6 up days in a row is pretty abnormal. So it's gonna have to breathe, and we're gonna have to see what it wants to do. We'll see what the volume is right now. The volume is very low. This is kind of what we were tracking down here. I'll have to make a new chart because a lot of these things are no longer relevant.
But the not investment advice is still relevant.
The investment advice is still relevant. Yeah. Do not listen to anything I say. I'm a dummy. But the other thing that's interesting is the supply chain thing. I don't know what to make of this. Like, I have now heard everything from, they're going to use the supply chain as a weapon to, a weapon to get people to get the shot,
vaccines, what you mean?
The jab. I've heard they're gonna just blame it on people not getting it. Like if COVID would just go away and you got the vaccine, then the supply chain would be good again, right? Like I've heard that theory. I don't know what people are gonna do. I don't know when it's really gonna rear its head and become an actual crisis, because right now it's just everybody keeps talking about it, but Amazon, the only difference is Amazon delivers my toothbrush a day later than normal. So it hasn't really affected us, the United States, in a way.
It's so reminiscent of COVID, though, right?
Yeah, it is.
Like it hit China. It was in the news. U.S. was sitting here laughing, literally laughing. Then it hit Italy, and right now I'd probably say the supply chain is more like in the UK area right now.
Definitely, yeah.
And like it just hasn't hit home, but it's like it is happening. Like something's happening. So until supply chain, inflation, and Evergrande are gone, I think we're in danger of hitting a 2020 level crash. Except there's not going to be a rebound that if it happens again.
Yeah, I also don't think it'll happen as steep. So if you go back to the 2020 crash, which I don't have in front of me right now, do you have it by any chance?
No.
On your charts? No.
Mm-hmm.
So if you go back to the 2020, it was like, so the angle of a move on a chart is relevant. So when you're kind of like on a 45-degree angle, like this angle right here, that's like a controlled, steady move down or up, and that has the potential to be strong and last a long time when it's at that kind of angle. It just means that there's no panic. Everything's under control in both directions. It could be just a steady downward slide or whatever, or steady upward run, which is what we've been seeing. I mean, if you look at this trend line, this is about 45 degrees right here. It's just a controlled move. The COVID one was like this. I mean, it was like way over 45 degrees. So it was pretty clear that it was when you look back, it was pretty clear that it was an overextended situation. It's also all relative to the scale of what you're looking at. So if you look at like the daily chart, it was like, oh yeah, clearly that was an overreaction. But if you looked at like the weekly chart, you're like, oh, well, that could just do this and then this, and then all of a sudden you have a 45-degree angle, as these lines come back in. So everything is in hindsight. But the daily chart specifically was a very sharp move. So anybody that was betting on it was saying this is an overreaction based on the steepness of the move. So this next move that comes off this high, I don't know. It could happen like 2020, but I don't think it'll be quite as. I think it'll be just more of a bleeding. We can't stop this slow moving barge, and that is a much longer drawn out crash that you just can't stop. There's not enough weight to get in front of it. So I don't know. Yeah, I don't really know, but there are definitely underlying issues that have not gone away. Like they're there. So until that, like you said, until those are truly resolved, I don't really know what to make of it. Trade the charts, but at the same time, like be aware that we all have to be aware. This is what we have this coming week. I was looking at this. I don't know if this can be read. It doesn't look like it can. Is that readable on the screen?
Nah, it's a little blurry, but anything you want to?
Well, there's a lot of earnings coming out. So the thing that like propelled off the bottom of the dip was the bank earnings that first started to come out. This is like earnings season, they call it. So this week though, I mean, Friday you've got personal income announcements, core price announcements. You have earnings throughout the week. Like I think Facebook is today, actually. So Facebook's earnings will come out. Then you have like worldwide stuff, and then you have pending home sales on the 28th for anybody watching that is real estate related. They might care about that, so we'll find out what the home sales are.
Yeah, I feel like we would have some sort of like maybe it's down from September or down from August, but it's not going to be anything shocking, right? Like because if it was, I feel like we would know of that already as lenders.
We'd feel it more. Yeah. We'd feel that end of it more. And I think like September or August or something was like record high, like 3 or 5% growth. And then they're projecting, it looks like here, 1% growth if I'm reading this particular one right. Yeah, I think they're projecting 1%. Yep. Previous, which I don't know if it was previous year. So it was 8% growth last year. I don't know. I don't know if I'm reading this correctly. This is based on last month or last year. But anyways, it shouldn't. I don't think anybody's expecting it to be what it was last month. So, nothing shocking there. But this kind of stuff will move the markets. Like it'll just move it in general, regardless. So I would say this week, I would say expect some volatility. But I don't know about surprises.
Yeah, exactly. I mean, the surprises, I don't think there's much to even talk about. I mean, I feel like those issues that we have highlighted, supply chain, Evergrande, inflation, something else has to happen here. Otherwise, it's kind of like we might as well just be another show on CNBC kind of thing where, they just speculate forever waiting for the next piece of news. Because, like, before this, it was, you could be saying until COVID is resolved, it's going to go down. And what's it do? It just keeps going up. And before that, it was like, what's North Korea going to do? What's Russia going to do? Right? Like
Yeah,
there's always
trade wars, this, that. Yeah.
exactly. There's always a story. But I do feel like these ones that we have highlighted, they were pretty imminent there. When the war started that we were previously talking, not the actual war, the literal war, but the
Financial war.
But now I feel like for it to become some sort of shocking news, there has to be another tie-in here. Otherwise, it's just kind of in the background, like something to watch. But something else needs to happen with the supply chain.
Dominating headline.
Yeah.
And when you log on to your news source and it's just every other line is like supply chain or Evergrande or whatever, and then you're like, okay, we're clearly going down at the moment. You just can kind of see that stuff. So
because even if let's just say Evergrande defaults, right?
Mm-hmm.
What does that impact mean? Right? Let's just say they did. Like, what does that mean? Does that mean supply stops throughout the world and it has to get resolved? Right? So like the consequence of all these is still not clear. We were just highlighting it before, saying, hey, these are out here. The money moved a lot. There could be more than what we are seeing coming our way.
And the issue is like this whole position, this whole war or whatever right here, this whole dip was based on Evergrande. So these positions all need resolution to Evergrande before they, before anything else can happen. So like, this is like all the Evergrande guys are sitting here, and that was a big move. So they still need to be those guys are holding this position saying exactly what we're saying right now. So, but they made their position short. Let's say they were short here. Evergrande starts to make its move and it goes back up. They're still holding right now because they're going, nope, not until Evergrande is ready. And it was a big enough move to say, like, we believe in this. So we believe Evergrande's a real issue. So until Evergrande does something, these positions just sit here like this. And then those guys will come back to life when there's Evergrande news in there.
And is there any correlation between that and the volume that we're seeing right now? I mean, because we've had 7-8 green days, but it's been half the volume.
Really light volume. I mean, that is interpretation, I guess, like everything else. But the interpretation of that is that you're making less commitment to an up move, especially to all-time highs. And there's like I said, as we watch the intraday markets, we go, the Fed was pumping it up. It looked like somebody was pumping it up and then just leaving the desk, and the players who actually are supposed to be in the market are just like, I don't want anything to do with this. Like, I don't want to touch it from here. So It just looked like that happened for like 5 or 6 days. And now I guess what they try to do is rely on people to be convinced to be like, all right, I guess the gig's up, and then they start trading at these numbers. But there's still
they wait for our show to say war's over.
All clear, yeah.
All clear.
But it's still very low volume. I don't think anybody's buying into this idea of like just make the chart go up and people will start playing again. Like, I think your whales are sitting. We don't see any yet. We don't see any. So, but the market will just move to where it is, and this might take a few months to unravel. Like it just might. Like, it might take right into early next year. When I say a few months, meaning so it started like last month, and this could go down to I liked your timeline of like January, February. It like lines up nicely for resources being a supply chain issue, middle of the winter, right after the holiday season, after everybody just experienced having trouble getting their Nintendo 64s for their kids. Like, it kind of lines up all well. But I'm just dreaming.
Right. So, all
right. Till tomorrow. We'll roll this through the end of the week, and then barring a crash, we will bring over to the REIT charts.
Sounds good. Alrighty.
Later.